elevation.
Cool and Dre.
Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200 for
What's going on, guys? Welcome back to Goofy Investing, where we talk about investing in the stock market. This is the underground, where we talk about high-level growth investing, mainly in the mid and small cap arena. Today, we're going to be talking about an actual automotive accessories company, but a little more than that. So let's dive right in. All right. Ticker request is going to be on Wksp. All right, ticker WKSP, trades on the NASDAQ, $1.07 a share due to market close. That was on the 17th, just yesterday, okay? Market cap is 12.72 million. Very small company, all right? We're going to find out if this is a bargain or not, that's for sure, all right? Where are they headquartered and what do they do? All right. Well, they're headquartered in West Seneca, New York. This industry is automotive parts and equipment and consumer discretionary. So their big hit product are these tonneau covers that are essentially they go on the back of pickup trucks, full-size pickup trucks, and smaller trucks like Toyota Tacomas, but what's special about their actual covers is they have their standard hardtop that is a tri-fold function. They have a vinyl wrap cover, which is probably like a little roll function there. But they actually have a hardtop cover that has solar panels, okay? So, and then those solar panels are accretive to storing more energy into the vehicle. So there's that to consider. They also have a core product, which is pretty much an energy storage generator, which connects to the actual panels as well. All right. So there that is. A little bit more stuff on their R&D and new product launching and program development. I'm seeing that they're working on a heat pump. Terravis Energy Etherlux Progress. Okay, so I don't assess this as an actual pass-through regulations product just yet. All right, this is more of a program which they intend to launch, but they do have a prototype product essentially ready to go in. And essentially this heat pump is special because it has key properties that are IP and patent technology that this heat pump can operate in negative 57 Fahrenheit without defrost cycles, okay? So cold weather geographics, this product would be applicable to, all right? So that's something to consider. How much is that worth? Well, I mean, you'd have to look into the total addressable market. I mean, there's a whole art and science behind pricing IP, and what you would do is you would price it against the actual company's market cap. All right. So a lot of the times, my experience with these companies that are on the NASDAQ or trading at these lower levels on the NASDAQ that are depressed levels, or even in the penny stock territory on over-the-counter markets, the IP and tech isn't really, how do you say, reflected in the market cap. So essentially, I do make these plays here and there to where I will purchase a stock and it'll be an IP and tech recognition play. So I'm buying it for the IP and tech valuation, which hasn't reflected yet into the stock. All right. Let's talk about some disclosures here. All right. I do not own shares into this company, so take that for what it is. I assure you this blanked out position here is not this company. It's another one. This blanked out one is actually my hot stock pick for my Patreon. So that's actually a 10x play, all right, by the end of 2027. All right, so there that is. So let's go back to some things, all right. Let's talk about or actually, let's do a sniff check on their finances real quick. All right. 2.91 million in debt, 6.15 million in cash. Keep in mind, market cap is 12.72 million, so that puts their enterprise value in at 9.48 million. But profitability margins. This company is cash burning, and they're cash burning a little bit dramatically here. All right, as you see, I know gross profit margin here is reflecting 27.79%. Guidance that was put out on their current margin is around 30% right now, according to their Q4 earnings call. Okay, so there's that. Also, forward guidance on 2026 margin for their gross profit. They're targeting expansion to 35% by year end of 2026. Consensus estimates got them doing 36.62 million in sales, is 127.41% sales growth. That's two analysts on that top side assessing that. And essentially that forward sales multiple is 0.35. All right. So on their current valuation, you're paying a 0.35 forward and a 0.41 trailing. So the growth I assess is probably not priced into the equity. All right. Looking at some financials, let's look at some income statement analysis. I don't want to make this too long of a video, all right? But here are some key takeaways that I've gotten with this, all right? So they're delivering the sales growth, but their actual cost of revenue is up there as well. And the margin, little bit of the margin is keeping up with the sales growth. However, the company is guided that their actual infrastructure build is set and ready to go for scale production. So essentially, their gross profit margin, all their margins are going to expand this year. All right. What is the actual conundrum or the actual flip of a coin issue, or the good and the bad? All right. Where the risk lies. Well, global tariffs, all right. Domestic aluminum costs are up 50%. So that's, and their actual tonneau cover hard top, a lot of it's consisted of aluminum. So that has been passed on to the consumer. It's yet to be seen with actual gas and oil prices. That will affect aluminum prices as well. So gas, that's what it is. Gas prices affect everything, especially transportation of product. Um, Oils are in plastics and all different types of items. So there's that. A lot of that is, a lot of their sales could depend on that as well. It's a double-edged sword. It can affect the cost of the actual cost of materials, and can also further dampen the consumer. So that's really the risk with this actual thesis going forward, at least in the short term for this year. All right. SG&A's a little bit up there, okay? They had to front load a lot of their marketing spend for the launch of the expansion, for their build out, okay? And they're saying that SG&A or marketing will stay flat at least, so or be tightened up anyway. All right. How do I assess how do I assess they're doing as a company as far as the earnings call? Let's talk about it, all right? Um I think the CEO is really he's the co-founder, he's the CEO, and that person is Stephen Rossi, okay? And this guy is pretty much the guy holding everything together. He's a great operator. He knows how to talk somewhat for how big the company is. And on their actual website, you can go here, watch this video where he's talking, to the NASDAQ indice reporter or whatever, and you can get a feel for what the CEO is like. But essentially, I think they got a decent, okay team. Not really. I'm not really too impressed with the CFO. That's just me. I don't think that the CFO has a lot of skin in the game, or maybe he doesn't really believe in the actual product or what have you, or the business model. That's just my little interpretation. Looking, just reading the tea leaves, take it for a grain of salt. That's what my assessment is. I think their team is capable of execution. Even if and if an investor said they're not, well, proof's in the pudding. They grew sales from 2023, year over year, consecutive rapid sales growth, 1.5 million to 8.5 million in sales, from 8.5 to 16.1 million in sales. Earning call was pretty smooth. I think they could have condensed the earning call as far as their initial statements and review of everything that happened in the quarter, and actually gave a little more time for Q&A. I think that there was some of the regurgitated information and so forth. I think that's really where an investor relations person or investor relations officer can be used there. All right. So take that for what it is. Okay. I've done the 10K analysis. PCOB and auditing is all up to snuff. The auditor says they're unsure on the forward metric that this company is sustainable as far as um, liquidity is staying out of bankruptcy and all that, and that's fair. If we go to their cash flow and you look at their net income cash burn and you actually look at their actual free cash flows, they're burning a lot of cash, guys. They're burning $3 a share annually, and they're trading at about $1 a share. Okay, so a lot of downward cash burn pressures happening on the equity right now. All right, but that's actually just the quant that you see. All right, the actual real value is the intangible, to where it's the numbers that you have to imagine in your mind, moving forward, and what you see the company is capable of executing with. All right. um, the company is also guiding that they have enough liquidity. All right, let me bring this up. And the slide deck, I think they could have condensed this a little bit better. It made more, and this is what's crazy, with the 30 slides here, it made more sense if I started at the bottom, like the last slide, and then worked my way up. All right. Going from like a reverse, presentation from what they actually presented. That it made more sense to me that way. So I think that they can use, once again, I reiterate, I think they can use an investor relations officer. A lot of your, novice investors are kind of get lost. They're gonna not really understand the intricacies, but the actual management is pretty clear on some certain key metrics on operational business model thesis. Um, so they're guiding that they have enough liquidity to reach free cash flow and operational cash flow profitability by the second half of 2026, under the condition that they get well, right now they have total liquidity position of 9.31 or 9.3 mil, and that's consistent of their 5.95 mil and 3.4 mil revolving credit line. Think about a revolving credit line as a corporate credit card. Their intent is to use the cash on hand first and use the credit card for emergencies. All right. Um, how have they been raising capital? What's their strategy mode of raising capital and so forth, and staying solvent? They're using warrants. All right. So they have a special shareholder that has purchased warrants, and they are starting to work that shareholder with warrant inducements. For those that don't know what warrant inducements are, at the initial phase of issuance of warrants to a specific shareholder, there will be terms to that warrant: strike price, exercising, duration of the warrant, different knickknacks of, if the this or that, of different rules of dilution, and different clauses where the company can buy out the warrant holder and buy back the warrants, all that type of stuff. But a warrant inducement is after the initial terms have been agreed to, somewhere during the duration, the company will jump in and say, hey, we'll give you a sweetener. If we change, we can change the, if you change the agreements, if you exercise your warrants and you infuse us with cash, we'll give you rolled over warrants and bonus shares. Okay, we'll sweeten the pot. And the company is doing a pretty good job doing that and working with the actual shareholder of those warrants. Okay, these are actually some of the slang proper term is really a sweetener. All right, I wonder if they use that language here. Okay, I guess they didn't. All right, but anyway, these warrant inducements, they're offering sweeteners to this actual specific shareholder that holds the warrants, and I'm tracking that this actual warrant structure does not pay any dividends or anything like that, but there are share issuances that are compensated to the actual warrants itself. All right, so there's that. Okay, so he- here's some pros and cons about this type of setup. If you have a shareholder that holds the warrants, you're you're likely at this small of a, or this meaningful portion of the float, when your company is only 12.72 mil and the warrant shareholder owns control of a good portion of the float. That shareholder, you know if that shareholder has deep pockets, he or she has the ability to manipulate the float and do a lot of stock base or stock manipulation, stock market manipulation into that equity. So that's kind of the risk you take. All right, with having one of these type of shareholders. Okay, so I mean, for those buying shares, of this actual equity, that's something to consider. All right. I think it's okay how they're actually raising of the capital and doing of that using warrants. All right. So the company is pretty much guided. All right. They're guiding anywhere from 35 to 42 million. All right, in sales with a 35% gross margin target. And this does not include their actual heat pump, the Etherlux product. So there's that. If they can actually achieve, let's say that they achieve this, let's say they do 40, in fact, not even, let's say they achieve 35 million or 36 million in sales with that 127%, and they get that gross margin target accomplished at 35 percent, and they get operationally cash flow. No doubt in my mind, this thing is going to fly. All right. So let's talk about this, and and how I think about it as an investment. One more thing, though. All right. Their CEO has recently bought shares at 85 cents, and holds 2.6 mil shares. And, so that says something. Insider ownership is 22%, but keep in mind the CEO owns about 20% of that. All right. Institutional ownership is very seldom, but demonstrates potential for future opportunity of institutional ownership. When is that opportunity going to be? They need to become a bigger market cap than just 12.72 million, guys. They need to get this into the hundreds of millions of market cap in order to capture more institutional shareholders, I assess. So this actual analysis is running a little long. So what do I think about this? Um, I think that this is a good sweet spot to start building a position. Not financial advice, but if I was interested in this company, I would start building into this. Um, Probably gonna wait for a pullback. This thing will see 90 cents again. Possible stock reversal as far as a reverse split happening to stay on the Nasdaq indices. That's another risk I assess. And I think that this is really the sweet spot since they've IPO'd in 2021. Um, and I think that the idea is someone just starting to build a position, starting to build a position now is going to experience the actual S curve phase of this company. How big do I think this company can get in 10 to 15 years, 15 to 20 years? I assess that upon maturing of their S curve product offerings, total addressable market, 15, 20 years, the maturing cycle, I got this as a $5 to $8 billion company if they execute properly and they go through all their execution of sales growth and everything. This company can be a really big company. 5 to 8 billion doesn't seem like a lot to a lot of stock market investors, but going from a 12.72 mil market cap to a 5.8 bill market cap, there's going to be some, rich investors out there, that's for sure. But they have to execute. They have to do the right thing and be cognizant of how they're delivering shareholder value. Um, I don't know. I don't specifically know if it's for me. Um, you know, I think there's a lot of risk with the actual tariffs and, this or that. A lot of the time, I dismiss a lot of the macro. If anything, the macro is a headwind right now, but would serve as a tailwind. What is the potential of their actual initial baby S curve on their first initial launch after their infrastructure build out? And if they do, the 127%, and this 2027 will probably grow. If they accomplish 127%, they're probably growing more than 24.81% next year. You can get an immediate, you can be looking at a 3 to 4x if they achieve operating profitability and they deliver on the sales and all this good stuff. You're looking at a 3 to 5x. Okay. So, but keep in mind they're still going to have to issue out shares, but the stock's going to be up so much that it's not going to matter. All right. So that's what I got. I hope you guys got value. Comment down below. Check out my Patreon. If you're getting value out of this, like and subscribe. You get access to my deep dive collection if you join my Patreon. I teach you how to value IP in tech. I teach you how I maneuver in the market, how I do analysis on stocks and so forth. You get a community of like-minded investors. 15 bucks a month, you can't beat it. If you click this button up and pay annually, it shoots down to 12 bucks. You save 20%. It's a steal deal. You get access to all my hot stock picks, more direct access to me, and so forth, and you get priority. All right. So with that being said, I know it was a long video. Thank you all for your time, and thank you all for your support. I love y'all, and take it easy.
You take the blue pill, the story ends. You wake up in your bed and believe whatever you want to believe. You take the red pill, you stay in Wonderland, and I show you how deep the rabbit hole goes.
One thing to question your mind, it's another to question your eyes and ears.